Hello, today is Wednesday, the 14th of March, 2012. Quick update. Going to do a comparison within the Dow Jones, the silver market, and the gold market. But what I really want to go over is Fibonacci analysis, as I have a perfect example. As I look at the Dow Jones chart, I'm just drawing in freehand the areas of which the 61.8 and 38.2% Fibonacci levels would occur as we're looking at the indices. And what I've said quite frequently is that when you can confirm that you're going to hold above one level, that means you should test the next one. So level here, next one is here, next one is here, next one is here. If you want to know what the next one after this is, it's usually the 161.8% from point A to point B. It looks pretty close as if it's there. I'm not even going to calculate it, but if it's important to you, you take the high, you subtract the low, you multiply that difference by 161.8%, and you add it from the low, if that's important to you. What's important to me is that you don't have to find resistance at a level that you're going to. It may. I've said, well, if you come here, it's all right to find resistance. Come back, find support in this area. Increase the chances that you take it out on the next level. Maybe even make another higher low. Yada, yada, yada. That's general ways. That's not the only way. Therefore, it could very easily break it and then boom, have an explosion. And the reason why I say this, because there will come a time where 50 will be tested yet again. It would be at least the fourth test of 50, as there was one test in 1980. There was two tests in 2011. And it's not a surprise if you have a move like this. After all, I've stated before that we are extremely due within the silver market to have a top 10 percentage gain week for silver. For the last time a top 10 up move has occurred, well, that's taken you back since 1998 or 1997, a long, long time ago. Possible, but I'm not going to say that it will happen. Let's do a comparison to silver, gold, and the Dow. We got three charts on here, which represents how much it's gained within, well, 1 year. In this kind of case, silver has held on to about 91% of its value, which means it's down about 9. The stock market has gained close to 9, and the gold market has gained about 16% from where it went, where it came from. Yes. So the question is, are we seeing that gold and silver work together? After all, since the bottom in here, this is going higher. Yet if we draw a straight line and match it up with, say, the other markets, say silver, for example, which is in white because it's the white metal. Silver's barely an uptrend since then, and gold is barely in a downtrend since that point. Sometimes they trade together, sometimes they do not. When everything was getting crazy in here, well, the price of stocks were going down, but that's because we had problems with the debt issue. How did they fix it? Well, how did they tell you that they fixed it? Was that they increased more debt. Yeah. But when this was going down, the price of gold was a complete opposite to what the price of the Dow Jones did. Now let's move this on to a 5-year chart. Going back for 5 years. So in the last 5 years, the stock market has made about 10%. And gold and silver pretty much at the exact same over 5 years. Up about 140%. Because it's up 2.45 times higher. To calculate the percent, you just subtract this by 1, and then you get 145% gain. Okay. Do they trade together? Well, since, say, what's a good time frame? We'll even do the silver breakout. There's just so many points that say sometimes they trade together, sometimes they do not. Here's a situation where since the silver broke out, stock market has barely went up. Silver has went up well. And gold has went up okay. Has gold went up as much as the stock market? More so, because I'm taking the same line here and I'm matching it with the gold rate of ascent from that same point. Gold's been doing higher. And for the final part, I'm not even going to go with charts, as I'm still working on getting saving my old long-term data, but it's fairly simple. 68, the LBMA started tracking the price of gold and silver. We'll go to 1980. Gold went up from 35 up to 800, which is like a 22 or so fold gain within that time frame. Silver went from a low of $1.25, but starting at 2 up to 50, once again an over 22 fold gain, and from the low like a 40-fold gain. And the stock market has been known as the silent crash because it just went sideways, and well, it went sideways. So gold and silver went up as the stock market went sideways. And then from 1980 for 2 decades up to 2000, the stock market was like, we went down to like 750, and it went back up to 10,000. That's like around a 13 times gain on the Dow. Silver went from 50 down to 3.5, which is like a 13 times loss. So that's complete opposite, really, than silver. Complete opposite. And gold went from 800 down to 250, which is about a 2.5 times loss. So is that trading together? The answer is no. No, not even close. And then from 2000 to current, we've seen the price of gold go from 250 up to 1900, currently in around the 1600 and change mark, which means it's up about 6-fold. Silver from 4 to 30-ish and change, up about 7-8-fold. And the stock market up from 10,000 to 13,000, up about 1.3 times fold. So no, they do not trade together. So if you're saying that the stock market, if it goes down big, that silver and gold have to, that would be a lie, but it still may go down together using historical data. Thank you for tuning in.